Welcome to Voyage Daily Tech, the most important news personalized for you every day, supported by Voyage.com.
After listening to today's news, you'll know first GM's new Silicon Valley Cowboy CPO ousts top execs, spearheading a personal autonomous vehicle pivot for 2028. So we'll discuss why this executive shakeup signals a radical strategy shift away from robotaxis and what it means for the future of car architecture. Second security startup Verkada hits a $5.8 billion valuation with $100 million from Alphabet, betting its future on AI-powered thinking cameras. We'll explore how this massive valuation reflects investor bets on AI disrupting the physical security market and its implications for enterprise surveillance technology. Third, the EU launches a major antitrust probe into Meta, accusing it of leveraging WhatsApp to block rival AI chatbot competitors. We'll analyse why this case is a turning point for platform regulation and how it could derail Meta's super app ambitions in Europe. Fourth, under 20% of a key Microsoft AI sales unit reportedly missed growth targets, exposing slow enterprise adoption for advanced AI. Today, we'll take a closer look at the gap between AI hype and enterprise reality and its implications for Wall Street's massive growth expectations. Fifth, Amazon's AI-designed cologne at its AWS conference failed. The smell test, with one engineer calling the result pretty unimpressive. This discussion will reveal how this public test connects to AI bias in creative fields and what it signals for Amazon's Scent-as-a-Service ambitions. What happens when a Silicon Valley cowboy takes over one of Detroit's oldest giants? At General Motors, it means 3 top tech executives are suddenly out the door. In just 6 months, GM's new Chief Product Officer, Sterling Anderson, has consolidated massive power, triggering an executive shakeup that is rocking the auto world. Anderson, a former Tesla exec who co-founded the self-driving company Aurora, is on a mission to completely reinvent GM. He told CNBC he once worried about being the Silicon Valley cowboy that's coming into Detroit and, pew-pewing his way through an innovation story. Now, he's doing exactly that. Anderson has stated he views the Detroit automaker as a canvas that can be curated, retouched, or even torn apart, and the tearing apart seems to have begun. For decades, cars have been built with dozens of separate small computers, each controlling one thing, one for the engine, one for the brakes, another for the radio. His plan is to rip that model apart and replace it with a single centralized computing platform, essentially turning the car into a smartphone on wheels. This is a massive architectural shift. Since his arrival, GM's acclaimed heads of software, artificial intelligence, and software product management have all unexpectedly exited the company. We're talking about very recent high-profile hires like Barak Turovsky, who's head of AI, and Dave Richardson, who is a senior VP of software engineering. Their responsibilities now fall under Anderson, who believes software and product must be one and the same. This isn't just a power grab. It's a fundamental change in strategy. GM is dissolving its central AI team and embedding that talent directly into product units. The thinking is that by putting AI experts right next to the people designing the car, you get faster, more relevant innovation. The trade-off is you risk creating inconsistencies, but it's a bet Anderson is clearly willing to make. But this internal power struggle is directly tied to a stunning new goal. Anderson is leading GM's charge to build a personal autonomous vehicle. And CEO Mary Barra has confirmed the target, autonomous highway driving in GM vehicles beginning in 2028. This announcement is an absolute bombshell because it comes just 1 year after GM disbanded its majority-owned Cruise AV robotaxi business, a project that burned through billions of dollars. And that context is everything. The Cruise robotaxi project wasn't just a small experiment. GM invested over $10 billion in it. But after a series of high-profile safety incidents and massive financial losses, they pulled the plug. So this new plan isn't about robotaxis for cities, which is what competitor Waymo is focused on. Instead, GM is pivoting to enhance its time zone times vehicles for its time zone times customers, aiming to compete more directly with Tesla's full self-driving features. It's a dramatic shift from public ride-hailing to private car ownership. For years, GM has struggled to integrate Silicon Valley talent, with one consultant describing a parade of experts who come in only to leave after short tenures. Now, GM is betting everything on one man to succeed, where so many others have failed, tasking a self-described cowboy with turning a 117-year-old manufacturing behemoth into a software-driven tech powerhouse. Speaking of Silicon Valley shaking things up, a security startup just hit a nearly $6 billion valuation. And the reason why is a total game changer. The company is Verkada, and it just secured $100 million in a new funding round led by Alphabet's venture capital arm, Capital G. Now, this isn't just a random investment. Capital G is Alphabet's independent growth fund, and they've also invested heavily in a cybersecurity firm called Amidst, which focuses on digital and IoT security. We're likely seeing Alphabet's largest strategic play here, assembling a comprehensive enterprise security portfolio that combines physical surveillance from Verkada with digital security from Amidst. They're creating a unified ecosystem for corporate clients. That investment rocketed its valuation to a massive $5.8 billion. Now, you might be asking if that valuation is driven more by the current AI hype cycle than by the company's actual performance. It's a fair question. The reality is Verkada's valuation is more than 5 times its annualized bookings. This signals that investors have incredibly high expectations for AI's ability to completely transform this legacy industry, and they're willing to pay a premium for a frontrunner. But this isn't about just another security camera. The technology getting Silicon Valley's biggest players to open their wallets is the real story. A partner at Capital G put it bluntly, saying the $60 billion physical security market is currently dominated by cameras that just record, not cameras that think. That's the core conflict. Verkada is betting its entire future on AI-powered cameras that do the thinking for you. And when we say thinking, we're not just talking about simple motion detection. The system uses sophisticated AI models for things like face detection and what's called attribute-based re-identification. This allows the system to track a person or vehicle not just by their face, but by their clothing, color, the type of car they're driving, and other specific details across a whole network of cameras. Believe it or not, the company is already capturing over 20 million images an hour. Its AI can take footage from multiple cameras and instantly weave it into a single unified timeline for investigators. No more digging through hours of separate videos. But with this incredible power comes incredible responsibility. And here we have to talk about the company's past. Back in 2021, Verkada suffered a massive data breach where hackers gained access to live feeds from 150,000 cameras in extremely sensitive locations, including hospitals, schools, and prisons. The breach exposed huge weaknesses. In response, Verkada launched a 100-day plan to overhaul its security, bringing in outside firms, creating a bug bounty program, and making 2-factor authentication mandatory for its own staff. It was a critical test of trust for a company that sells security itself. This all begs the question, what's the real-world impact? Verkada's CEO points to incidents like the Louvre heist, arguing that AI-assisted devices could have monitored the situation in real time and immediately alerted security. He said, if you could know in real time that that's happening, the potential for savings and preventing damage is tremendous. This isn't just a concept, it's a rapidly growing business. Verkada has already surpassed $1 billion in annualized bookings across 30,000 customers, from schools to retailers to government properties. And this is where the conversation gets even more complicated. Verkada's platform is being marketed for more than just security. It's being used for operational analytics, like tracking foot traffic in a store or occupancy rates in an office. This shifts its function into a new realm with serious ethical questions. For example, what are the guardrails for using this to monitor employee productivity or student behavior? The US Equal Employment Opportunity Commission has already warned that this kind of monitoring could violate anti-discrimination laws. A recent Pew Research study found that 81% of Americans believe this level of AI monitoring would make workers feel inappropriately watched. It's a huge area of concern as this technology becomes more common. The battle for the $60 billion security market is no longer just about who can see what's happening. It's about who can understand it first. From a startup leveraging AI to a tech giant being accused of stifling it, get this. The European Union just opened a full-blown antitrust investigation into Meta, accusing it of a stunning power play, using its massive WhatsApp platform to choke out its AI competition. This isn't just about one feature. It's about Meta's grand ambition to turn WhatsApp into a Western super app, a single platform for everything, much like China's incredibly successful WeChat. Imagine doing your shopping, banking, and messaging all without ever leaving WhatsApp. By integrating its own AI and blocking others, Meta is trying to build the walls of that digital fortress. and European regulators are the first to challenge the entire strategy. The European Commission launched the probe after receiving complaints from smaller tech companies. They claim Meta is changing its policies to block rival AI providers from reaching customers through WhatsApp, a move that would directly boost Meta's own integrated AI system. One of those companies, the Interaction Company of California, didn't mince words. Its CEO, Marvin von Hagen, stated that if Meta's policy stands, millions of European consumers will be deprived of new and innovative AI assistance. He called for swift intervention from the Commission. This is the classic developer's dilemma. These startups built their entire business model on top of another company's platform, leveraging WhatsApp's huge user base to grow. It's a symbiotic relationship, but it's also incredibly risky. It highlights the central question of whether these startups are true innovators or simply at the mercy of the host platform's strategic whims. But the pressure isn't just coming from startups. EU Antitrust Chief Teresa Ribera has already signalled that the Commission may impose immediate interim measures against Meta even before the full investigation concludes. She said, "We need to address what is happening. This isn't just a warning shot, it's a threat of imminent action." For its part, a WhatsApp spokesperson called the claims baseless, stating that the rise of outside chatbots has put a strain on our systems that they were not designed to support. Now, that strain on our system's defense is pretty controversial. WhatsApp's architecture, which uses end-to-end encryption by default, does make it technically challenging to integrate third-party apps without creating security risks. When we place that claim alongside what competitors are doing, however, the argument starts to look a bit thin. For instance, Telegram and Slack have robust systems that allow thousands of third-party bots to operate smoothly, suggesting the technical challenges are solvable and the decision might be more about competitive strategy. This fight is escalating on multiple fronts. Italy's own competition authority has already launched a parallel investigation into Meta for abusing its market dominance on the exact same issue, and the stakes for Meta are enormous. If found guilty of breaching EU antitrust rules, the company faces a fine of as much as 10% of its entire global annual turnover. The battle line is drawn. The core of this entire fight really comes down to one critical question. How do you define the market? Is it the broad market for all AI services everywhere, which is Meta's view, or is it the very specific, narrow market of AI services accessible through WhatsApp, which seems to be the EU's view? How regulators define this boundary will set a crucial precedent for all future antitrust cases involving AI integrated into dominant platforms. As Meta rolls out its own AI across Europe, regulators are signalling they will not allow WhatsApp to become a graveyard for its competitors. Speaking of AI ambitions hitting a wall, it seems even Microsoft is facing some headwinds. A bombshell report claims that inside one of its key AI sales units, less than a fifth of the team met their growth targets. The report from the information focuses on Microsoft's advanced AI platform, Foundry. So what is Foundry? It's not just a chatbot. We're talking about something called an AI agent platform. The idea is to create AI systems that can autonomously perform complex business tasks like analyzing data, managing supply chains, or even executing financial trades with minimal human help. This is the holy grail for enterprise AI right now. A while back, we talked about how some of Microsoft's biggest customers were balking at paying $30 per user per month for Copilot. Some even asked to take those licenses to zero. Foundry sits a layer above that seat-based assistant model. And today's report suggests even this upmarket agentic pitch is running into similar enterprise friction. The report alleges that in one US Azure unit, the sales growth target was a steep 50%, a goal that fewer than 20% of salespeople could actually hit. In another unit, an ambitious quota to double sales was reportedly slashed down to 50% after most of the team failed to meet it. The fallout was immediate. Microsoft's stock sank more than 2% on the news. This is significant because it reveals just how sensitive Wall Street is to the AI hype train. Investors have priced massive, rapid AI growth into these tech stocks. In fact, the Organization for Economic Cooperation and Development, the OECD, has even warned that an AI-driven stock market bubble poses a significant risk to the economy. We previously analysed how the Bank of England issued a similar alarm flagging a potential dot-com style correction. So when a report hints the adoption curve might be slower than expected, the market gets spooked instantly. This is the company that has been leading the charge in the AI gold rush, and suddenly there are signs of trouble in paradise. But Microsoft is pushing back hard. A spokesperson stated the company has not lowered its aggregate sales quotas for AI products and accused the report of inaccurately combining the concepts of growth and quotas. It's a direct standoff between the tech giant and the news outlet. And even Microsoft has acknowledged that adoption of these tools by more traditional businesses is lagging, which lines up with what we've been hearing across the enterprise stack. There's also a subtle but important difference between a sales quota and a growth target that's worth pointing out. A quota is often a fixed dollar amount a salesperson needs to hit. A growth target is the rate of increase. So Microsoft can technically be telling the truth. They didn't lower the overall quota while still adjusting the growth expectations downward because the market just isn't ready. It's a strategic recalibration. This isn't just about internal sales goals, though. The report points to a much bigger problem facing the entire industry. The actual adoption of these complex tools by traditional businesses is lagging. A while back, we highlighted that an MIT study found 95% of enterprise generative AI implementations show no measurable bottom line impact. That's the backdrop, and today we're seeing the latest symptom. For example, the report noted that private equity giant Carlyle Group struggled with similar AI tools, finding they couldn't reliably connect data and ultimately reduced how much it spent on them. The reason this is happening is because integrating these AI agents is incredibly hard. First, you have massive data integration problems. Second, there are huge security and governance concerns. And finally, it's really difficult to prove a clear return on investment. As we've discussed before, you can't just turn the AI, you have to make the data AI ready. That hidden work often costs more than the subscription itself. A recent Gartner report even predicts that over 40% of these big agentic AI projects will be cancelled by 2027, precisely because of high costs and unclear business results. This all leads to a crucial question: what's the real end game here? While the AI revolution is being touted daily, the battle to get major corporations to actually pay for and integrate these new expensive tools is proving to be a much tougher fight than anyone expected. The hype is loud, but the sales are quiet. And the competitive pressure isn't easing. We noted a while back that one 16,000 employee company even moved email back to Google to lean into Gemini. So the switching risk is real if Microsoft can't translate demos into deployment. We were just talking about the gap between AI hype and reality in the enterprise world. And now we have a story that illustrates this perfectly, but in a much more fragrant way. An engineer waited 3 hours for a custom cologne designed by Amazon's new AI, and his final verdict was that it, quote, really stinks. This wasn't just any cologne. This was the main attraction at Amazon's massive AWS reInvent conference in Las Vegas, an event with 60,000 attendees paying up to $2,100 for a ticket. While sessions on data lakes and cloud modernization took place, the longest lines, with waits of over an hour, were for the AI fragrance lab. So how does an AI even begin to understand something as abstract as a scent? Well, the system likely uses something called a scent-to-concept vector space. Think of it like a giant map where words like nature-loving are placed close to specific scent ingredients like bamboo or mint. The AI was trained on massive amounts of data, things like market research, chemical compounds, and maybe even cultural reviews of perfumes to build this map. It's trying to translate feelings into a formula. The stakes here are huge. The Scent Lab was a demonstration meant to prove Amazon's prowess in AI, especially amid market concerns that it is lagging behind its rivals. The company used 4 of its own AI models to guide users through prompts about their favorite activities and moods, promising a uniquely curated aroma. The AI would then generate a formula for human perfumers flown in from France to mix on the spot. Interestingly enough, having human perfumers on hand isn't just for show. The established fragrance industry has been using AI for years. Companies like Givaudan have an AI called Cardo, and Simrise works with IBM's Falira. But in those cases, the AI acts as a co-pilot for the expert human perfumer. It can suggest novel combinations a human might never think of, but the final artistic touch still comes from the person. Amazon is trying to put the AI front and center, but still needed that human expertise to actually mix the final product. So what happened? Take Anthony Walker, a 30-year-old engineer. He told the AI he was nature-loving and creative. After waiting about 3 hours, the AI produced a bamboo and mint-based aroma named Sylvan Craft. Walker's review, he called it pretty unimpressive and very feminine when he was expecting something more earthy or nutty. Here's where it gets interesting. The AI's failure to match his expectation of a masculine scent highlights a huge challenge. Bias in the bottle. How do you train an AI on something as subjective as smell without reinforcing cultural or gendered stereotypes? Research shows that scent perception varies wildly. While a scent like vanilla is almost universally loved, what one culture finds fresh, another might not. The AI is trained on existing data, and if that data is full of stereotypes, like florals are for women and woody scents are for men, the AI will just learn and repeat them. It's a massive ethical hurdle. His final plan for the AI-generated scent, quote, "I'll give this to my girlfriend. She'll be happy with it." The experience highlights a critical tension. At a conference designed to showcase Amazon as an AI leader, the most popular demonstration delivered a result that for some simply failed the smell test. But this isn't just about a bad bottle of cologne. This is likely a very public test for a future Amazon product. After all, think about it, a scent as a service API that Amazon could sell through AWS. Retailers could use it to create custom scents for their stores. Hotels could design a unique lobby fragrance. It fits perfectly into Amazon's broader strategy of using AI to connect its digital empire with physical commerce. This little perfume lab might just be the first whiff of a much, much bigger ambition.
That's it for today on Voyage Daily Tech. Follow, share, and stay tuned for daily updates coming your way tomorrow.